Hey guys, this is Joey here, Software Reminder and Chief Trainer at Trading Impossible. Right, so in this video, I'm going to share with you how you can time your entry and exit for a sell position. That means the stock were to reverse down, how can you actually be prepared to ride the downside? So just take a look at this chart called Capital Land right over here. Right, you can see that Capital Land has been supported above the $3, since October 2015 to about January. So it's about 3 to 4 months already, right? And hit a high of about 340, but came back down again. So let's just draw some lines. So I will draw the $3 key psychological support level, which it has been supported pretty well. It kind of touched 1 time, 2 times, 3, 4, 5, 6. So it's about 6 times. And today what we have seen is a sell down back to the $3 level. So it was not able to climb above that 340 level. So you're seeing some resistance at about 340. Okay, it was actually about 330 level. So it was actually resistance was about 330, but it kind of break above, went up to 340, but came back down when the market weakened again, right? And it was hovering at support at about 325, 324. But then again, it broke below 325 and started its decline back again to the $3 level. So currently, what we are seeing is a very clear support at $3 where it has rebounded from many times since October, right? But we need to be careful of a breakdown of this level, even though it can also rebound, from $3 back to that $3.10 to 314 level. So we're probably seeing a resistance from 310 to 315 right over here. So in order to trade this, there are 2 ways we can trade this. One of them is to ride the upside. That means we can place some long positions to buy at probably 305, 301, 3015, to ride a rebound back up to 308 to 310 first, and then we probably get up, because the trend, as we are saying, the short-term trend is still down. Okay, it's still down, even though the longer-term trend is more or less moving sideways, but the shorter-term trend is still down, especially if it stays below the 310 to 315 level. So it might rebound back to that 310 to 315 level, and that's where we can probably start to take some profit. So if we were to have some long positions, because we wanted to catch a rebound like what we have seen in October, November and December, we can do it as well. So we probably have scaled some long positions from 305 to 301, 3015, right? And once it were to rebound, we raise our stop loss to above break-even price. That means if let's say you entered at 3.01 or 305 and then it rebounded, you're lucky it kind of rebounded back to 305 or 306. So what we do is, when you have already made money, when you bought at 301 and the price goes up to 305, okay, assuming you just bought 5 lots or 10 lots, the thing is you would have already made money from it. So what we do is to raise our stop loss upwards. So our initial stop loss for this long position will probably be 2.97 or 2.96, 2.98. So I'll probably set it as 2.97. So I just want to give some leeway in case it were to break down and rebound back up. So that would be our stop loss. But if the price was to maintain above $3, our stop loss will not be hit. So that's when, if the price started to move up to 305 or 306, we will start to raise our stop loss upwards. That means from 298 or 297, raise it to 3.04 or 3.05 as it goes higher. So if it goes to 308, we raise it higher to 305. So if it were to rebound or retrace back down again, we hit our stop loss and we get out. So the point here is that once you are in the money already, you do not lose money, because you do not want to be in a position whereby it went up and then you did not stop loss and rebound back to 301 and then it break down and then you just feel quite sore about it, because you did not sell out, right? So whenever you are in the money already, you raise your stop loss along the way. So if you were to retrace back down, especially if the trend is still down, so if you were to retrace back down, okay, you will get out immediately and you will still make some money, right? So of course, if you can raise your stop loss along the way and still take profit from 308 to 312 to 315, so you can take profit along here. So you can scale your sell positions upwards along here, right? So that's how we trade the long side of it if you want to catch the rebound. But if you want to catch the sell down, what you can do is to place a sell stop limit order. So you can place a sell stop limit order at probably 297 or 298. So if you were to break below the $3 level, that's where you will trigger a sell order to sell, and that's where you ride the downside, all the way down to probably 290 support. Okay, 290, and then it can go down to as low as 270 to 265. So that's the gap that we are seeing over here. I mean, if you break below that $3, it can be quite dangerous. It can go all the way down. So that's where we can write the downside. So normally what I'll do is I will set an alert. So if you were to break below the $3, I will look at the charts again. I'll look at volume. I'll look at some of the market depth, the price action, right? And then I'll decide if I would place a sell order to write the downside. But of course, if you want to have it automated, you can just place a sell stop limit order to once it breaks below, it will be triggered if it touches your trigger price, your stop price, and it will start to go on, and it will start to write your downside from there, right? So that's how we can trade this counter with it just hovering above the $3 support level. So whichever way you want to trade, you just need to know your plan. What's your target price, what's your stop loss level. So there's no right or wrong in trading, but you just need to know your plan, right? As long as the reward to risk ratio is favorable, right, you can go ahead with a very clear plan, right? So but for now, what I'm saying is that, because the market is still weak, and I would say that based on this bar over here, okay, unless it were to go back above that 308 to 310, we're still seeing some weakness, especially with it touching the $3. So hopefully the $3 hold, but if it does not and people start to throw down from 299 or $3 or 298, we got to be careful, because that's when it can start to retrace all the way back down fast and close the gap that it has created, in September, October, when it rebounded from. So that's that 20 to 30 cents gap we can't see it fall. So we got to be careful like this, right? So I hope you have learned something from this video, and yep, I'll see you in the next video again. Thank you.